Good afternoon, Matrix. Welcome to Mindset Learn Extra. You tuned in with myself, Tebogo, and Martin. How are you doing today?
Hi, I'm great, thanks. How are you, Tebogo?
I'm well, thanks. Now, would you kindly let our grade 12s know what section of accounting we're dealing with today?
Okay, well, Mindsetters, today we're looking at an important section called manufacturing, and today we're going to be looking at the ledger accounts.
Sounds very interesting. You may head on to your board while I quickly address the Mindsetters. Mindsetters, need I remind you that today is the 18th of July, Nelson Mandela Day. Let us know how you spent your 67 minutes of Madiba Day, and I'll be waiting here to read some of your posts and to see how you guys have been acting kindly towards the community and other people. Without any further ado, facebook.com/learnextra, mindsetlearn/live is where you should post all your questions, all your queries, all your comments. Let us know how your week is going. Martin, over to you.
Thank you very much, Tebogo, and welcome, Mindsetters. Today you don't have 67 minutes of accounting, but only 1 hour. And what we're going to be doing today are, as I've said before, our grade 12 ledger accounts. It is a section that some of you may remember from grade 11, but we're going to revise it and we're going to make sure that you know exactly what to expect in your final exam. So let's have a look at some of the important objectives of this lesson. First of all, something that you have to think about that's important. We are going to distinguish between direct and indirect costs. Remember, when you're doing manufacturing, you're interested in calculating the cost of your finished product. So you'll need to be able to distinguish between these two vitally important costing concepts. Some are direct, some are indirect, but I'll tell you more about that later. You also have to understand the very important different ledger accounts that are unique to a manufacturing enterprise. Okay, this always deals with a manufacturing enterprise as opposed to a service business or a retail business, but we'll talk about those differences too in a few minutes. Then finally, what we're going to look at today is to complete the important stock and cost accounts that exist in a manufacturing enterprise. Now, I know some of you have covered this already, and you'll know that there's a second important section in manufacturing, which is the production cost statement. We'll be doing that in another lesson. Today, we're just focusing on the ledger accounts. So, let's have a look at the important concepts that you need to know and that you need to remember. First of all, there are some key differences between a manufacturing business and a retail or a service business. Tebogo, if I say the word manufacturing to you, what type of business do you think of?
A factory, I don't know.
Right, a factory, yeah. Something that makes some or other product. So when we're dealing with manufacturing, we are physically making the product that we sell. Not like Pick n Pay or ShopRite. Pick n Pay and ShopRite are what we call retail businesses, because what they do is they sell finished goods to the public. They don't manufacture all the goods that they sell. And finally, we have things like service businesses, which are also very important. A service business would be something like a cell phone provider. They are called service providers because what they do for you is they let you use their airtime. They're actually doing something for you. Usually a service can be defined as when somebody gives you help in exchange for money. So for instance, a doctor, a plumber, a lawyer, a teacher, a cell phone company, all of those will be service providers. But in today's lesson, we're dealing only with this important one, the manufacturing enterprise. So what you need to know is that a manufacturing enterprise has got 3 different stock accounts as opposed to a retail business. So a retail business, we all know from grade 10 accounting, they usually have only one stock account, and that's the one that we call trading stock. So you know that a retail business sells stock, and that is called your trading stock or your trading inventory. A manufacturing business, on the other hand, has got 3 different stock accounts. Think about what they are in the meantime, and I'll remind you of them shortly. And then, Tebogo, I'd like to ask the Mindsetters to write in on Facebook and maybe tell me the answer to this question.
Okay.
A service business does not have any stock accounts. So a retail business only has the trading stock account. A service business has no stock accounts. And maybe somebody from the audience or a Mindsetter can tell us why a service business does not have stock accounts. And we'll answer that question later on. So get those answers in. Okay, so let's look at the 3 stock accounts that exist in a manufacturing business. This is your important theory, Mindsetters, so be sure that you understand this well. First of all, we've got raw material stock. This is your first one. If we are looking at a manufacturing business needs raw materials out of which to make its finished product. If I'm a business that manufactures cakes, I'm a bakery, what I'm going to need is ingredients such as flour, water, eggs, sugar, that sort of thing. Bake a cake out of it, those are going to be your raw materials. Those need to be purchased from other businesses, and the account that records raw materials purchased is going to be our raw materials stock account. You should know, mindsetters, that stock accounts are always assets, which means that they go up on the debit side and they go down on the credit side. So when you purchase raw materials, you are going to make an entry on the debit side of your raw materials stock account, and when you return stock or when you issue raw materials for production, you are going to make an entry on the credit side. I'll show you those entries just now when we tackle a question together, but I'm sure that you'll remember them from last year. Then, another very important account, what are we going to do with our raw materials to start our production process? Well, that's very easy. We're going to take them to the factory and we're going to start combining them in order to make a finished product. As we do that, we create our second stock account, which is our work in progress. So these are things that we are busy making. They're not completed yet. So for example, if you think about a car, if I was to manufacture a car, it would take a very long time because there are lots and lots and lots and lots of parts that have to be put together to make a car. So if a partially assembled car is in my warehouse, I'm going to call it work in progress. Very, very important that you understand the difference between our raw materials and our work in progress. What we've done is we've combined some items together to form an unfinished product. Another question that I'd just like to ask you, maybe you can give me another name for the work in progress account. I'll give you the answer later on after the first commercial break. Also, what you need to know is that this account, the work in progress account, will have a balance at the end of the financial year. At the end of the financial year, we're going to close our factory, and at the end of that day, there are going to be some products that are still unfinished. So what that is, those are our goods that are partially completed. So maybe it's a car with 2 wheels on, it hasn't got the last axle with the last 2 wheels on. It's a partially completed car, and it's already worth more than the raw materials because you just need to add a few raw materials and some few extra work to complete it. But they are not yet finished goods, so you can't sell them yet. So the work in progress account is important because it measures the quantity of stock that is still unfinished. It's also an asset, it's also a trading stock account, so again, it's going to go up on the debit side and down on the credit side, as I'm going to show you just now. Next thing that's important is once we have completed goods, what we're going to do with those goods then is we're going to sell them. So once my goods are completed, I take them out of the factory and I'll put them into my shop where I sell them to a retailer or where I sell them to somebody else. Once those goods have been completed, we call them finished goods stock. That is our third ledger account, finished goods stock. They are our goods that are now ready for sale. They've been completed. And what's important to realize is that these finished goods are the ones that are equivalent to the trading stock account in the retail business. Because we're not going to sell raw materials to the public, we're not going to sell work in progress to the public. What we're going to sell is finished goods, and so we have an account for finished goods stock. Also, once again, this is an asset, so it goes up on the debit side and it goes down on the credit side. I hope you remember all your different stock accounts. Now, let's have a look at this little diagram, which might just help you understand how the 3 different stock accounts are used in production. If you are producing something, you may even remember this from EMS back in the days of grade 8 and grade 9, you will know that there's a production process which consists of taking inputs, producing something, and creating outputs. So the inputs are stored in the warehouse, and these are called raw materials. That's where you use your raw materials stock account. You then transfer them into the factory where they become work in progress, and once they are finished, they become your outputs and become your finished goods, which are then sold to your customers. So this is a small diagrammatical way of showing when you use the three stock accounts. They're different parts of the business. Right, so that's the first important concept that you need to know, is your different accounts. If we look now at our next set of concepts, what we need to know when we're doing our production, each time we transfer goods from one part to another part in the production process, we're going to credit one account because we're taking the stock out and debit the other account because we're putting it in. So when I transfer goods from the factory to the shop, I'm going to debit the finished goods stock account and I'm going to credit the work in progress account. But I'm going to show you just now how that works when we do the example together. Now, very importantly, if I am running a business, I will want to know what the costs of production are. If I don't know what my products cost me, I will have no idea at what price to sell them at if I want to make a profit. So a business must calculate the cost of production so that they can know at what price the finished goods should be sold. You can then add a markup to it and you can calculate what you need to calculate to work out your selling price. So let's have a look at the important concepts that you have to know for the three cost accounts. We have to distinguish between direct costs and indirect costs. Direct costs and indirect costs, this is a very important distinction, so mindsetters, learn your theory well, because you can get good marks in this section if you know the difference between them. Direct costs can be divided into labor and material costs. So let's go through each of them in turn. Direct labor costs are actually also sometimes called touch labor costs. The direct laborer is a person who physically makes the product. It's the person who, if the product is a cake, physically puts the ingredients into the mixing bowl, bakes the cake, prepares the cake, and has it ready for consumption. So direct labor costs will be all the wages and all the salaries of the workers who physically make the product. In other words, they're responsible for creating the finished product out of their raw materials. Also, mindsetters, please do not forget that your direct labor costs include your contributions. So all the contributions, such as the pension fund, the UIF, and the various other contributions that the employer may make, such as the medical aid fund, should also be included in your direct labor costs, because they are costs of employing that particular worker. So an example that I've given here on this page is a factory worker who takes all these electronic components together, assembles them, puts them together, and makes us a TV set. Let's have a look at the difference between the direct and the indirect labor costs. So the indirect labor costs, you'll remember, mindsetters, these are the wages and the salaries of the workers who do not directly make the product, but who also work in the factory. So this is going to be a worker who works in the factory every day, but he or she does not make the physical product, but they're working in the factory. So a good example of that will be a cleaner in the factory. That person has to ensure that the work surfaces are clean and that everybody can do their jobs. Another person might be the factory supervisor. This is the person who walks around and checks that all the workers are doing their jobs correctly, or who controls the quality of the finished products. So those are what we call indirect labor costs. And please, 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 mindsetters, remember that you do not include the wages or salaries of any worker who does not work in the factory. Direct and indirect labor only relate to the factory. And you'll see just now how the question can be put so that you have to remember this difference. Now, let's have a look at the material costs. Material costs are also important because you get direct material costs and you get indirect material costs. These are very, very similar to your direct labor and your indirect labor. If we're thinking about direct material costs, those are going to be the materials or the ingredients that are used to make the finished product that actually directly form part of that finished product. So if you're making a cake, direct materials are going to be the flour, it's going to be the water, the eggs, the sugar, everything else that you put into your cake. Indirect material costs, on the other hand, are going to be the costs of items that are used in the factory, but that do not form part of the finished product. So these are things that we have to use in the day-to-day running of the factory, but they are not actually part of the finished product, and these are usually consumable stores. So I don't know how we're doing, Tebogo. I think we're about right for a break.
Yeah.
I'd like to ask the mindsetters that during the ad break, maybe you can think of some examples of consumable stores or some examples of indirect material costs that we can discuss after the break.
True. Right, mindsetters, you've earned yourself the right to a break. During the break, do as he says. And while doing that, don't forget to text your friends, remind them about the lesson so they catch us before we move on a little bit deeper. See you guys after the break. Welcome back, Mindsetters. I trust you guys had a very refreshing break. If you just joined us, we tuned in studio with Martin when we're busy with accounting, manufacturing. Make sure you understand you download the notes from our Facebook page. That is facebook.com/learnextra or mindsetlearn/live. John, Martin, over to you.
Thanks very much, Tebogo. So I asked you before the break, mindsetters, to think of some examples of indirect materials. Remember we said before that our indirect materials were items that are used in the factory but that do not form part of the finished product. So it's got to be something that gets used up in the factory but isn't part of the product that we are selling. I'm sure you've thought of some examples. Let me give you two important examples. One is going to be your cleaning materials. So, you know, a factory can be quite a dirty place. You're using all sorts of different parts, and sometimes there's oil and sometimes there are other things that make the factory quite dirty and it needs to be cleaned at the end. So any cleaning material, you don't sell a finished product with cleaning material attached to it. The cleaning material is used in the factory, but it actually is not part of the finished product. So we will consider that to be an indirect material cost. Another important thing, an indirect material might be something such as petrol if you need some type of fuel to operate a machine, or it might be something such as sandpaper. You know, if I'm making furniture, I'm going to use the sandpaper to sand the desk down so that it's nice and smooth, but that sandpaper is not sold with the finished desk. So pretty much something like that would be an indirect material. Okay, now that you know the difference between those two types of costs, direct and indirect materials and direct and indirect labor, there are just two more important things that you need to know. In the theory, there's an important formula. Sometimes a question will ask you to calculate prime costs. And if you're calculating prime costs, that's very easy. All you do is you take your direct material costs and you add your direct labor costs. So those are the direct costs of making a product. Take direct material plus direct labor, that gives you your prime costs. Then another important thing that we need to cover is our manufacturing overheads. You're going to have to know how to do your manufacturing overhead T account. And into that T account, you're going to put all the costs that are included in running the factory, including your your indirect materials and your indirect labor, but excluding all the costs of the other parts of the business. So some businesses have got a factory component and an office component. In your manufacturing overheads, you're going to include only the costs that are involved in running the factory. You're not going to include the rent of the office or the telephone calls that are made in the office or the advertising or the selling and distribution expenses. Please make sure that you understand that the manufacturing overheads are the costs of the factory alone, not any other costs. And they include your indirect materials and your indirect labor, but not your direct labor and your direct materials. You'll see we have separate T accounts for those items. Okay, now another important thing, what you need to know is that all of the other costs in the business, in other words, your selling and distribution expenses and any office expenses, those are not going to go in any manufacturing ledger account. They are going to get transferred straight to profit and loss. I'm sure you mindsetters all remember in grade 10 you had to know how to close off your expenses and your incomes to your profit and loss account at the end of the year. You'll do exactly the same with your selling and distribution expenses or your office expenses. Right now, we're only looking at the manufacturing overheads, so we're only going to consider the costs that are involved in running the factory. But I'll show you how to do that now. Okay, and finally, what you need to know as well when you answer the question is that usually some numbers will be left blank. I'm sure you remember this from your grade 11 year. You remember all of those different club accounts when you had to do your membership fees with accrued incomes and prepaid expenses and various things like that. You'd usually get a ledger account where there would be one number that was missing, and to calculate it you had to go backwards and work out the balancing figure. Very, very often when you're doing accounts for manufacturing ledgers, most of the time they're going to leave one or two numbers blank, and you're going to have to understand the relationship between the different ledger accounts to be able to calculate your missing numbers. So that's why it's so important to study your ledger accounts and see how they work together. They all are part of the production process, and if you understand the ledger accounts well, you won't have any problems with the questions. Tebogo, I think we should tackle a question now. What do you think?
I think so too.
Okay, so let's have a look at the question that I have here for you. This is a business called Marshall Manufacturers, and what they do is they produce parts for electrical appliances. So they make televisions or something like that, and what they then do is sell them to various retailers at a markup of 40%. Their financial year, like most businesses, ends on the 28th of February each year, and what we have to do is prepare the information, use the information to prepare the different ledger accounts in our answer book. So right now you can see we've got a raw material stock account, we've got a work in progress stock account, and we've got a finished goods stock account. I also, before the break, asked if anybody could remember another name for the work in progress stock account. Did we have any answers to that question,
No,
Tebogo?
not yet.
No
Not that
answers.
I can see any.
Okay, so try and get those answers in, Mindsetters. Afterwards, I'm going to tell you what the answer is. So let's have a look at the information that we've been given. It says that the following balances appeared in the books on the 1st of March 2012. And we've got raw material stock, work in progress, finished goods, and consumable stores on hand. Very important that you know what those consumable stores on hand are. Remember, we said that indirect materials are the consumable items that get used up in the factory. So usually in a question you can assume that the consumable stores are going to be your indirect materials. However, the other three, we've got ledger accounts for them. We've got 54,000 in raw material stock, we've got 14,000 in work in progress, and we've got 25,000 in finished goods at the beginning of the year. What this means is that your raw material stock account had 54,000 in at the beginning of the year, so there was 54,000 rands worth of raw materials that we started the year with. We then had a work in progress account of 14,000. That means that in our factory there was 14,000 rands worth of partially completed products, and then we had 25,000 that were finished goods. So we're going to start off by putting these three balances in the general ledger. If you've been concentrating on what I said earlier, I'm sure you'll know very easily on which side to put them. We said that all of these three stock accounts were assets, so we should know that all of these three will have opening balances on the debit side of their various accounts. So let's go and stick them in. They were the 1st of March 2012. So if we go here to our raw material stock account, we'll put the date. It's March the 1st. And just as always, we put balance brought down. And I'll do the same. I'm going to fill in the numbers now. March the 1st, balance brought down, also on the debit side because it is a stock account. And then thirdly, we'll also do it in finished goods. March the 1st, balance brought down. Now we just need to put the numbers in. I seem to remember that the balance on the raw material stock account was 54,000, so I'm going to write it in here. Let's just check that it was. Yes, there's the 54,000. I've put it in. Usually a good idea to tick off the numbers that you've used when doing ledger accounts. We've got work in progress of 14,000 and finished goods of 25,000. Let's just try and remember that. So our work in progress was 14,000 and our finished goods was I think it was 24,000. Let's just check it. 25,000, sorry. 25,000 goes in here. So you're already getting some marks just for opening balances. Okay, so now we've got our opening balances here. Remember, they're all assets accounts. Some people like to put in on which side the account goes up and on which side the account goes down. So a plus minus is always a good thing to do. So I'll just stick these in to remind us that every time these accounts go up, we debit them, and every time they go down, we credit them. So let's have a look at the rest of the information that's been given to us. Here are some transactions for the year. So our first thing is that we have total purchases of raw materials. What we've done, Mindsetters, is we've bought raw materials to the value of 480,000 Rand. So those are raw materials coming in. So what we should know is that this amount has to appear on the debit side of our raw materials stock account. What else is important is that they're telling us that 60% of this amount was bought on credit, so we can assume that the remaining 40% was purchased for cash. This is going to affect our ledger account entries, so let's put them in. What we're going to do is we're going to fill in the 480,000, but only part of it was for cash and the other part was for credit. So let's do a calculation to check which part was for cash and which part was for credit. 60% was for credit, so I'm going to take my 480,000, I'm going to multiply it by 60% by 60 over 100, so that gives me 288,000. What that means is that 288,000 of this amount was purchased on credit. I'm sure I don't need to tell you how to do the next part of the calculation. If you want to know what part was purchased for cash, all you do is you take the 480,000, you subtract the 288,000. Let's just do that quickly on the calculator. So I'm going to take 480,000, which were our total purchases. I'm going to subtract 288,000, and what that gives me is 192,000, and that's the amount that was purchased for cash. So let's just write that down to remind us. On the information book, 288,000 was purchased on credit, and 192,000, which is the remainder, was purchased for cash. I'm sure you already can tell me how we're going to fill that in our ledger account, but let's do it anyway. 288,000 on credit, 192,000 on cash. The way you do it is you go to your ledger account. Both of these transactions are going to make my raw material stock account go up, so they need to be written on the debit side. I will write over here 288,000, and I will write 192,000. We have to do them separately because they affect different contra accounts. So what will happen here is this will be on the 28th of February because we're recording all of the transactions at once that happened during the year. Because this here was raw materials that we purchased on credit, we're going to simply write the contra entry is creditors control. And we all know that the creditors control account that is recorded in the CJ. This of course was for cash, so we will simply write the word bank, and we know that we purchase stock from the bank using the CPJ. So what we've done now is recorded our two purchases. They've made the raw materials stock account go up. Next item says that raw materials worth 21,000 Rand were returned to creditors. Tebogo, if I return something to somebody, do I still have it?
No.
So I'm going to have to subtract it from my stock account, right? So I'm going to take this 21,000. We know that my stock account goes up on the debit side, so obviously it's got to go down on the credit side. And we've got to put 21,000 on the credit side, so let's get back to our answer sheet. 21,000 Rand is going to appear on the credit side over here. I'll also put February the 28th because we're recording all of the transactions that happened during the year. And when we return stuff to a creditor, I'm sure you all know which journal we use. We use the creditors allowances journal, and what that's going to do is affect our creditors control account as well. So what that means is that out of this 192,000 that we bought, out of this 288,000 that we bought on credit, we've returned 21,000 to our creditors. Okay, I think we've got time for one more transaction before we take a break. Our next part here is our indirect materials, and it says that our indirect materials bought for the factory They were bought on credit for 17,000 Rand. I'm sure, mindsetters, you can remember what we said about our indirect materials. We said that they have to be included in our factory overheads. If you think back to what I said earlier, indirect materials are part of factory overheads. So we're going to take these indirect materials that we've purchased. They were worth 17,000 Rand, and we know that this is going to go in our factory overheads or our manufacturing overheads. But if you remember at the beginning, we had a balance of 1,000 Rand. These were consumable stores on hand from the end of last year. So we had those 1,000, and then we bought an additional 17,000. Those were going to be used in our factory as factory overheads. So let's put that information in our factory overheads account. Sorry, I'm just going to get back to it. It should be on the next page here. Okay, here are our factory overhead costs. So this is always a tip for what you should do when you have your indirect materials. You'd put again the date here, February 28th. Costs are always expenses, so they go up on the debit side and down on the credit side. And what we'll do is we will put our indirect materials here. But usually with your indirect materials, you have a calculation. So you should put in brackets what you started with, which was this 1,000 that we had at the beginning of the year. And then we bought an additional 17,000 during the year, which must be debited to our factory overheads account as well. So let me just add it over here, plus 17,000. We can't complete this account yet because we have to work out at the end of the year what is on hand. Got a few more transactions to do, but I think it's time for a break, Tebogo.
It is indeed. Now, I'd like to read at least 3 birthday wishes that I've received from my mindsetters. And the first one is from Tlaiseho Mafulukhela. My bad. And he says, happy birthday, man of manner, hero of heroes, man of his mind. Happy birthday, Nelson Baba, Rolihlahla Mandela. Long live Madiba, long live. And another one is from Godliva Masibudi. He says, happy birthday, Tata, get well soon. Madiba, we love you. And our final one is from Siphelele Nene. And she says, live so that when SA generations think of fairness, caring and integrity, they think of you. Only a strong tree can stand alone, and that's why we're here 100% behind Madiba, bowing. Awesome. Thank you guys. See you guys after the break. Welcome back, Mindsetters. Yes, we are still busy with accounting with Martin. I see you guys haven't answered any of his questions, so I'm assuming you guys are busy with your 67 minutes of kindness or just paying way too much attention to manufacturing, which is a good thing. Now, Martin, I'm going to hand the show over to you.
Okay, thank you very much, Tebogo. We've got a couple more adjustments to do, so let's see how we go with those. Okay, our next adjustment is one that you have to pay careful attention to because this is going to illustrate clearly some of the concepts that we've been discussing earlier. You'll see that this adjustment says salaries and wages amounted to 220,000 Rand. It now says that this must be divided in the ratio 5:3:2 between direct labour, indirect labour, and the salaries of our office staff. And it's given you some extra hints. It's told you that direct labour is 5 parts and indirect labour is only 3 parts. So this question is testing your knowledge about where the different parts of your salaries and wages go. So remember at the beginning we distinguished between our direct labour and our indirect labour. And we said that your direct labour has got its own ledger account, but indirect labour is included in your factory overheads or your manufacturing overheads as they are sometimes called. So what we have to do is we have to split this amount of 220,000 in that ratio and allocate different parts of that number to different parts of the business. So the ratio, or the number must be divided in the ratio 5:3:2. A useful hint, which I'm sure you remember from your grade 11 partnerships, when you are splitting things according to a ratio, you should add the different parts of the ratio together. So what we're going to do is we're going to add 5 + 3 + 2, and that gives you 10. 5 plus 3 plus 2 equals 10. What this means is that we have to divide this amount into 10 parts. Once we have 10 equal parts, we're going to allocate 5 parts to direct labour, 3 parts to indirect labour, and 2 parts to the salaries of the office staff. They've told us what the ratio is. So let's have a look at what we need to do. We're going to take our 220,000, which is our total salaries, and we're going to split it according to the ratio, which means we must divide it by 10. So that gives me 22,000. That is one part, and we've got in the question the fact that the direct labour is getting 5 parts. So if we want to know what our direct labour is, we simply take this number and multiply it by 5. So we have to allocate 110,000 of that 220,000 to direct labour. Let's just write it down so that we don't forget. So direct labour is going to get 110,000. We've just calculated it. As far as indirect labour goes, indirect labour is going to get 3 parts out of that 10. So remember, we do the calculation in exactly the same way. We took our 220,000 and we divided it by 10 to get our 22,000. What we then do is we multiply that by 3, and that's going to give us 66,000. So out of the 220,000 for our salaries and wages, 66,000 is indirect labour. Let's write that over here as well. 66,000, I'll use a different colour, goes to indirect labour. Now here's the little trick in the question which you have to be aware of. It's told us that the salaries of office staff have to be 2 parts. But to be honest with you, we don't care about that. They're giving us that. Just if we had to work it out, we can. It's very easy. You could just work it out the same way and multiply by 2. But we don't care about that right now because we said that the salaries of office staff are not included in our production cost statement. They are not included in our manufacturing ledger accounts. Office staff do not work in the factory, and we're only interested in the costs of the factory when we're doing this type of question. So they've told you that information, but there's no need to calculate it because you're not going to use it. Okay, so we've calculated our direct labour is 110,000 and our indirect labour is 66,000. All we have to do now is put it into the appropriate ledger accounts. So let's have a look here. Here is our direct labour cost account. What we do is we simply record on the debit side for February the 28th, which is the end of our financial year, we're going to record the amount of 110,000. You remember we worked out that the direct labour was 110,000, and our details are going to be salaries and wages. You have to sometimes write small to fit it in the ledger account on the answer sheet. And they're going to be posted there from our general journal. In our same way, we need to put the indirect labour that we calculated here as, just getting back to the information book, 66,000. That indirect labour has also got to go in one of our manufacturing ledger accounts because it's going to be added to the cost of production because those people work in the factory. Doesn't matter that they don't physically make the product, the fact that they're working in the factory means that their salaries and wages must be included in the ledger account. 66,000 Rand, we have to go to our factory overheads. Remember I said to you that your indirect labour always goes here. So we'll take our factory overheads account and we'll put in here indirect labour. You could put indirect labour, but you could also put salaries and wages if you like. It's probably better to put salaries and wages, but either one is acceptable. That's going to be in the general journal, and the amount was 66,000 Rand. What they've done is they've put the salaries of office staff in, but it's completely unimportant because we're not going to do the profit and loss account today. We're only doing the special cost accounts for a manufacturing process. So we have now finished with that adjustment. It's done. Okay, let's look at the next part. Next part says that medical aid deductions for the employees come to 88,000 Rand. Here it's testing a little bit of your knowledge between the difference between deductions and contributions. Deductions are paid by the employee, whereas contributions are paid by the employer. They are extra expenses to the employer or extra expenses to the business. So what this question is telling you is that the deductions of 88,000 are being paid out of the employee's salary, so they were included in the 220,000 that we had in the previous question. However, it tells us something more. it says that the business contributes 2 Rand for every 1 Rand contributed by the employee. So what this means is that there is a medical aid contribution by the employer. So this contribution, we need to calculate it. It is 2 Rand for every 1 Rand that the employee contributes. Our question already tells us that the employees contribute 88,000. Those are the deductions that are subtracted from their salary. If we had to work out the contributions, it's very easy. All we're going to do is we're going to take the 88,000, which is the employees' deductions, and we're going to multiply it by 2 because the business contributes 2 Rand for every 1 Rand that the employees contribute. If we calculate that, we get an answer of 176,000 Rand. So let's put that answer in here. The contributions are, in total, 176,000 Rand. Now, what we need to do is we need to allocate the contributions to the correct ledger accounts. Remember I said to you at the beginning, when we were going through the theory, that our direct labor costs and our indirect labor costs include all of the contributions. So your UIF, pension fund, and all of the different contributions like medical aid that the employer makes on the employee's behalf. We have to record those contributions in the relevant ledger accounts. We don't record the deductions again because you should remember from grade 10 the deductions are part of the gross salaries and wages. So we need to now calculate the different contributions for each of the different employees. We can always assume that if the salaries and wages were split in the ratio 5:3:2, what that means is that the contributions should also be split in the ratio 5:3:2. So we're going to do the same calculation. Out of this 176,000, we need to work out what part belongs to our direct labourers. The way we do that is we divide it by 10, because there are 10 parts, and that gives us 17,600. And just like in the previous question, we're going to multiply this answer by 5, because 5 parts of that belong to direct labour, 3 parts belong to indirect labour, and only 2 parts belong to the office staff, which, remember, we are not going to include. We do the calculation, and we see that 88,000, it happens to be the same answer as what we had previously, 88,000 are the contributions of this business to the direct labourers. So what we're going to do with this 88,000, we'll take it to the ledger account, and it's going to be recorded in the direct labour cost account. We'll put it here as medical aid contributions. I'm just going to abbreviate it here to save some time and space. Please remember that in your final exam, you're not allowed to abbreviate. The only things you can abbreviate are journal abbreviations such as GJ or CPJ or CRJ. So the medical aid contributions in the GJ are going to be 88,000 Rand for our direct labourers. Remember, these have to be included in your direct labour cost account. If we look back at the information book, let's do the second part of the calculation. We know that the business contributes 2 Rand for every 1 Rand, and we've worked out that our total contributions were 176,000. If we have to calculate the part that belongs to indirect labour, that's going to be quite easy. What we'll do is we'll do the same calculation, 176,000, we're going to divide it by 10, and then we're going to multiply the answer by 3, because 3 parts of that go towards your indirect labour. That answer is 52,800, so once again, we need to go back here to our factory overhead costs, and we're going to put in here medical aid contributions, and that will be from the general journal, and that's the answer of 52,800 that we've just calculated here on the calculator. So let's stick that in. Okay, so now we've accounted for the salaries and wages of the direct labourers and the indirect labourers. Let's have a look at our next adjustment. Our next adjustment is also one of these where you have to allocate things quite carefully. You'll see here it says that office insurance amounted to 64,000 Rand for the year. And then it tells us that the factory insurance is double that of the office insurance. Remember we said earlier that we do not include any office expenses when we are calculating our costs of production. They are a separate section of the business. the office is separate to the factory. In our ledger accounts, we're only interested in the factory insurance, so what we should do is double the amount. That's quite easy, just multiply it by 2. So it's 64,000 times by 2. So we know that our office insurance is 128,000. Sorry, our factory insurance is 128,000 because it is double that of our office insurance. This is a little bit of a trick question because the examiner wants you to know that we disregard our office expenses and record only our factory expenses, and we should know that factory insurance is necessary to keep our factory running. So what we have to do there is record the 128,000 in our factory overheads. So if I go back to my factory overhead cost account, what I'm going to do is I'm going to record here an amount for insurance, and that's also the general journal, which is 128,000 Rand. I hope you all realize that we're not going to include the office insurance. Next question is also similar to that. It says that rent amounting to 620,000 was paid during the year. So our total rent for the office, for the factory, for the shop, for every other part of the business that we have came to 620,000 Rand. And it also tells us that the factory uses 80% of the available floor space. This is again one of those questions that you have to know how to do. We're only interested in factory overheads, so we're only interested in the part of the rent that is paid for factory purposes. So we don't care about the full 620,000, we're only going to include the part that belongs to the factory, which is 80% of that number. So let's calculate it. If we go to our calculator again, 620,000 was our total rent, and we are only going to consider 80% of it because the other 20% was for something else, whether it's the office or the shop, we don't know. We also don't care because we're only recording factory expenses. Answer comes to 496,000 Rand, and that 496,000 Rand we know is going to be a factory expense. All factory expenses are recorded in the factory overhead cost account, so the calculation that we've done just needs to be recorded here as rent. This rent is also in the general journal, and the answer comes to 496,000 Rand. Lots of calculations, but it's very easy if you know what belongs in which account. It also tells us now that total sales were 2.8 million Rand for the year. So 2.8 million Rand were our total sales. If we are selling stock in the business, what this means is that we are selling our finished goods. So these total sales relate to sales of finished goods only. Tebogo, if I sell some stock in my business, am I going to have more or less stock left over once I've sold it?
Less.
I'm going to have less, right? So what has to happen when I sell in my finished goods stock account? Must it go up or must it go down? It's going to decrease. Right, I'm sure everybody can see that as well. So it's going to decrease, so this entry needs to be made on the decreasing side of our finished goods stock account. And we know that finished goods are assets, so they're going to decrease on the credit side. Very good. So what's important here, though, is that the question has given us total sales. This is a common mistake if people don't read the question carefully. They've given us total sales, so they've given us the amount at the selling price. And remember that our finished goods records our stock at the cost price. So what do we need if we want to calculate the cost price if we've been given the selling price? Very, very easy. We need the markup. You may have to search a little bit for the markup, but it's definitely here. It was in the other part of the question. Sorry, I remember it was 40%, but it's not on this page. It was in the main question here. If you look back at this, it says Marshall Manufacturers sells at a markup of 40%. Here is your grade 9 EMS and grade 10 accounting. This is a vitally important formula because it keeps coming up again and again and again. You need to know how to calculate the cost price if you're given the selling price and the markup. You should remember the formula. Let me just write it up in case you've forgotten. Your cost of sales is always equal to sales times 100 over, and this is in brackets, markup plus 100. I always say to my classes, do this calculation in brackets in your head because it's very, very easy. What's 100 plus 40? That's going to be 140. So what we're going to do is we're going to take our sales, multiply it by 100, and divide by 140, and that's going to give us our cost of sales. So you remember that the answer for our sales here was, let me just go down to it again, our selling price was 2.8 million. So our calculation is going to be as follows. We're going to take our 2.8 million, 5 zeros, we're going to multiply it by 100, and we're going to divide it by 140, because that's our markup formula, and the answer we get here comes to 2 million, a nice and easy number to remember. What we do with this 2 million, we are going to go to our finished goods stock account, which was over here, and this account tells us that we have sold 2 million rands worth of stock this year. So when we sell our stock, you all identified it correctly, we decrease our finished goods stock account. So during the year, the account decreased by 2 million. The 2.8 million was the selling price, and we've just calculated the 2 million right here. And the details for this have to be cost of sales. Remember I said to you earlier that the finished goods stock account is very similar to the trading stock account for a retail business. So you should know very well that that is what the procedure is. When you sell something, you credit the account and you write cost of sales. And what we should actually do here is, we don't know whether it was sold for cash or whether it was sold for credit. The question didn't tell us. So you could either put CRJ in here, or you could put DJ here if you sold it on credit. It doesn't matter because the question didn't give you enough information for that. Okay, I think we've got time for one final adjustment, which is the last one here. It says that there were other factory expenses, and there was electricity and depreciation on factory equipment. This is a very easy adjustment because they've just given you these two figures, and what you need to do is realize that those are factory overheads. What we'll do is we'll go to the factory overheads. We've got electricity of 90,000. Very easy. All you do is you go to your page with the factory overheads account, and at the bottom here we're going to include both of those items, depreciation, and we're going to include electricity. So there was going to be 90,000 rands worth of electricity, which you should remember from here, and there was 22,480 for depreciation. Now, mindsetters, we're almost out of time. So what you now need to do is you need to remember how the accounts are transferred from one to the other. You'll need to now, in your own time, try to calculate our balances. We've entered all the transactions here, and you're going to balance these accounts off by remembering where they all get transferred to. I'm sure that you'll be able to do that. So try and do that and see whether you can get the right balances at the end of the year. They're given to you in the question. But the important thing is to understand where to record every single transaction that happens during the year in these different ledger accounts. So I think we're almost out of time, Tebogo.
Yeah, we almost are. Thank you so much for the productive lesson. I'm sure our mindsetters do appreciate it. I hope you guys understand everything that has been discussed in today's lesson. If you don't understand, don't worry, the notes are posted on Facebook. Make sure you download those. Make sure you understand. If you understand, answering in the exams will be a walk in the park, guys. Trust me, I've been there. Thank you, guys. On that note, thanks for tuning in. Bye, until next time. Martin, over to you.
Thank you very much, Tebogo, and welcome, mindsetters. Today you don't have 67 minutes of accounting, but only 1 hour. And what we're going to be doing today are, as I've said before, our grade 12 ledger accounts. It is a section that some of you may remember from grade 11, but we're going to revise it, and we're going to make sure that you know exactly what to expect in your final exam. So let's have a look at some of the important objectives of this lesson. First of all, something that you have to think about that's important. We are going to distinguish between direct and indirect costs. Remember, when you're doing manufacturing, you're interested in calculating the cost of your finished product. So you'll need to be able to distinguish between these two vitally important costing concepts. Some are direct, some are indirect, but I'll tell you more about that later. You also have to understand the very important different ledger accounts. that are unique to a manufacturing enterprise. Okay, this always deals with a manufacturing enterprise as opposed to a service business or a retail business, but we'll talk about those differences too in a few minutes. Then finally, what we're going to look at today is to phone provider. They are called service providers because what they do for you is they let you use their airtime. They're actually doing something for you. Usually a service can be defined as when somebody gives you help in exchange for money. So for instance, a doctor, a plumber, a lawyer, a teacher, a cell phone company, all of those will be service providers. But in today's lesson, we're dealing only with this important one, the manufacturing enterprise. So what you need to know is that a manufacturing enterprise has got 3 different stock accounts, as opposed to a retail business. So a retail business, we all know from grade 10 accounting, they usually have only one stock account, and that's the one that we call trading stock. So you know that a retail business sells stock, and that is called your trading stock or your trading inventory. A manufacturing business, on the other hand, has got 3 different stock accounts. Think about what they are in the meantime, and I'll remind you of them shortly. And then, Tebogo, I'd like to ask the mindsetters to write in on Facebook and maybe tell me the answer to this question.
Okay.
A service business does not have complete the important stock and cost accounts that exist in a manufacturing enterprise. Now, I know some of you have covered this already, and you'll know that there's a second important section in manufacturing, which is the production cost statement. We'll be doing that in another lesson. Today, we're just focusing on the ledger accounts. So, let's have a look at the important concepts that you need to know and that you need to remember. First of all, there are some key differences between a manufacturing business and a retail or a service business. Tebogo, if I say the word manufacturing to you, what type of business do you think of?
A factory, I don't know.
Right, a factory,
yeah.
something that makes some or other product. So when we're dealing with manufacturing, we are physically making the product that we sell. Not like Pick n Pay or ShopRite. Pick n Pay and ShopRite are what we call retail businesses, because what they do is they sell finished goods to the public. They don't manufacture all the goods that they sell. And finally, we have things like service businesses, which are also very important. A service business would be something like a cell.
Good afternoon, Matrix. Welcome to Mindset Learn Extra. You tuned in with myself, Tebogo, and Martin. How are you doing today?
Hi, I'm great, thanks. How are you, Tebogo?
I'm well, thanks. Now, would you kindly let our grade 12s know what section of accounting we're dealing with today?
Okay, well, mindsetters, today we're looking at an important section called manufacturing, and today we're going to be looking at the ledger accounts.
Sounds very interesting. You may head onto your board while I quickly address the mindsetters. Mindsetters, need I remind you that today is the 18th of July, Nelson Mandela Day. Let us know how you spent your 67 minutes of Madiba Day, and I'll be waiting here to read some of your posts and to see how you guys have been acting kindly towards the community and other people. Without any further ado, facebook.com/learnextra, mindsetlearn/live is where you should post all your questions, all your queries, all your comments. Let us know how your week is going.
Any stock accounts. So a retail business only has the trading stock account. A service business has no stock accounts. And maybe somebody from the audience or a mindsetter can tell us why a service business does not have stock accounts. And we'll answer that question later on. So get those answers in. Okay, so let's look at the 3 stock accounts that exist in a manufacturing business. This is your important theory, mindsetters, so be sure that you understand this well. First of all, we've got raw material stock. This is your first one. If we are looking at a manufacturing business needs raw materials out of which to make its finished product. If I'm a business that manufactures cakes, I'm a bakery, what I'm going to need is ingredients such as flour, water, eggs, sugar, that sort of thing. Bake a cake out of it, those are going to be your raw materials. Those need to be purchased from other businesses, and the account that records raw materials purchased is going to be our raw materials stock account. You should know, mindsetters, that stock accounts are always assets, which means